Good afternoon, everybody, and welcome to Bulls, Bears, and Bowties. Yes, we're a work in progress. It was CIOs and Bowties last week after getting some feedback. Feedback and hashtag embracing change is what it's all about. So we're now running with Bulls, Bears, and Bowties. Greg Silberman, Chief Investment Officer, ACG Wealth, and David Crook, Global Economist and Chief Strategy Officer of ACG Wealth. Our email addresses dcrook@acgwealth.com, the URL www.acgwealth.com, and Greg, your email address?
gsilberman@acgwealth.com. And David, let me just chime in real quickly here. I was quite surprised a couple of days after our first production. Apparently we have an admirer out there, or should I say I have an admirer, because this beautiful little bow tie with the money bow tie arrived on my desk. So we're getting out there, and there's some followers and likes apparently for what we got to do.
And long may it continue.
Indeed.
We're trying to be in the present. We want stuff that interests you all, and that's how we will run these events, not with material that is outdated, boring, or anything of the like. So what's in the news in the past few days? Well, it's been Turkey, a strong dollar, emerging markets more than anything else. I guess there's been some Tesla talk and the like, but this afternoon we're addressing a stronger dollar and the implications for emerging markets. So with that being said, we would first like to begin in, I believe, Greg, why is the dollar stronger?
Yeah, let's just jump right in, David. And what the dollar's been moving higher, contrary to popular opinion or market opinion, and that's been now six months or longer. So what is pushing the dollar higher?
Greg, a number of factors. We need to remember that presently, in the age as we are today, the dollar is the world's reserve currency. And all things being told, there is no real competitor. A decade and a half ago, one would have thought that perhaps the euro would stand up and be a competitor to the dollar as the world's reserve currency. It really hasn't panned out that way at all. In fact, with the euro at 114 and a touch this afternoon, interesting times in currency markets just in general. So the world's reserve currency, that's not going to be the case forever, but that's a story for another day. Cryptocurrencies perhaps, and other currencies, barter, many instances of how the world is trying to steer away from its reliance upon the dollar. Certainly President Putin and Russia are doing their utmost right now to become less reliant on the dollar, but for the time being, the dollar is the world's reserve currency. Number one, for a strong dollar. Number two, the US economy. Second quarter GDP growth, 4.1% acceleration quarter over quarter. Great numbers for the US economy. The US economy is forging ahead like no other in the world to speak of. That, of course, helps the dollar in and of itself. So reserve currency and great economic performance from the US right now. Thirdly, we have a central bank, Federal Reserve Bank, that is raising interest rates. Many parts of the world, that's not the case. And as the interest differential increases, it becomes more attractive to hold dollars. So that's the third reason that the dollar is looking well bid at the moment. And by and large, Greg, when I'm referring to the dollar today, I'm referring to the dollar index.
Mm-hmm.
Dollar against a basket of 6 currencies, which is heavily weighted towards the euro, then the yen and sterling, etc., etc. Okay. So we are alluding to the dollar index per se. Lastly, Europe. Largest economy in the world, taking large Europe into account. With that being said, they're struggling. Interest rates are particularly low there, negative in some areas of larger Europe, and that in and of itself is not helping the euro become a competitor. So that aids in the dollar's bid. With that being said, Draghi of the European Central Bank has stated we're going to end QE, I beg your pardon, at the end of 2018. However, I would suggest to you folks, interest rates in Europe are going to remain low for longer in any event. So the interest differential between Europe and the US will either grow or certainly remain wider for the time being. So those are 3 points that are really, 4 points, I beg your pardon, that are really supporting the dollar bid right now. There is something on the periphery, maybe not so much on the periphery, that would like the dollar to be lower, and that is our own President Trump. We have this view in Keynesian world, not a Keynesian myself, let me add, that a strong currency, by definition, would not help net exporters. And that would be the case. So the president has tweeted, he's tweeted to the Federal Reserve Chairman Powell saying, let's not raise interest rates. We don't want a stronger dollar to speak of. But by and large, the president's tweets and the Federal Reserve Bank are some ways apart right now. Thank goodness they're somewhat independent. That's a good thing. And by the way, another argument for another day, I think a strong dollar for a domestic economy, a strong currency for a domestic economy, i.e. whether it be a strong rand for South Africans or strong sterling for the British or a strong dollar for the US, is very beneficial by and large. So forget this downside on the export side of things. So that is why, Greg, we have a strong dollar right now, and I think that's here to stay for the foreseeable future.
Great. Well, thank you. Obviously, there are some winners and some losers as far as a strong dollar policy is concerned, and so maybe let's just flip the discussion real quick and talk about the losing side of the channel, if you will, and that's our old friends at the in the Bosphorus, Turkey.
Right.
So Turkey. So let me handle that a little bit and summarize as much as I can. There's some interesting parallels with Turkey. They have issued a humongous amount of dollar-denominated bonds, dollar-denominated sovereign credit, to the tune, I believe, of $500 billion. And Warren Buffett has that old favorite saying that when the tide goes out, we see who is surfing without a swimming costume, as we would say, which is a bathing suit. And it looks like as the tide is going out, i.e. the dollar is going higher and interest rates are going higher, we're seeing who's left swimming without trunks. And Turkey seems to be top of that list. So let's discuss a little bit there. Turkey, interestingly enough, there seems to be a trend around strong male-dominated leaders around the world. I know you will chime in that in a sec, but Erdogan, president, he certainly fits the bill for that. He was running hard on a re-election campaign, and essentially, did get re-elected back in June 24th.
With much more power, I might add. And,
right. So he's got his eyes on, my assumption, on some dictatorial view on Turkey. He wants to be the dictator of Turkey. But to get re-elected, he did everything that sane economists say you shouldn't do. He primed the economy. He kept interest rates artificially low, and
pumped money into the economy.
Okay.
Borrowed left, right, and centre.
Okay, so that brings us to this point. Then a bit of a snafu, let's say. They arrested a pastor, an American pastor, a gentleman by the name of Andrew Brunson, I believe is his name. And the claim is that this pastor was involved with a group that contrived the coup d'etat back in 2016. You'll recall there was an attempted coup d'etat. And so they've got this gentleman in custody, and obviously that doesn't bode well with our fearless leader, President Trump, who almost knee-jerk reaction responded with tariffs on Turkey, specifically tariffs on the metal industry. Well, now you've got this little, to and fro with some strong guys kind of throwing punches at each other. Erdogan ends up saying to his folks, listen, as the Turkish lira is starting to collapse, I want you to take your dollars and I want you to take your gold and convert it into lira. Well, I don't think that's going to happen anytime soon. And then now we're hearing talks of a debt moratorium, which is a very fancy way of saying stop all the local institutions from servicing their foreign currency debt. That's a debacle in the making. I mean, if you've got $500 billion of credit that is going to default, no matter what market you're talking about, that is a catastrophe potentially waiting to happen.
And if I can add to that, Greg, in terms of the Turkey perfect storm, Erdogan, playing politics, has appointed his son-in-law, mind you, as the Treasury Secretary, Minister of Finance, as it's called in Turkey, and that obviously doesn't augur well in the international community either. In fact, earlier today, this is Friday, do you know the day today, Greg? It's Friday of the week that he was talking to a bunch of international investors in the UK, got a reasonable response, but the fact that an inexperienced family member is the Treasury Secretary or the Minister of Finance doesn't augur well for the viewpoint of the international investing community.
So you know the old saying, when a carpenter sees everything is a nail to a carpenter, right? So to us South African boykies, everything is a South African parallel to us. So the few things that strike me as a parallel, a debt moratorium, maybe you can speak about that, because that's something we were accustomed to back in the 80s when sanctions were on South Africa. And you talk about nepotism. South Africa is filled with nepotism at every level of the government, which is just not proving well. So maybe tell our audience a little bit about that experience.
The bottom line, folks, is that we live in a world that is becoming much more global. Clearly, the last few weeks and months with regarding tariffs and trade wars. A trade war doesn't really exist to this point in time, and hopefully it doesn't. But that being said, ringing the fences makes no sense at all, because we're in a global environment right now. The world has changed, and everybody is reliant upon everybody else at some degree or another. That too goes for the case of the flow of monies. And with that being said, emerging economies, like developed economies, need access to international capital. If that, in fact, is cut off from you, there is pain to be had. And
especially if there's mismanagement going on in the background.
And if there's domestic mismanagement, then you really are into a hiding to nothing in terms of success.
You know, I was doing some research for this specific call and looking at the various debt to GDP ratios. There's another way of saying, when you take out a mortgage on your home, they look at what your income is compared to your debt level.
Loan to value, right?
Yeah, so that's exactly the same thing on a sovereign basis. What's the GDP, the total income versus the debt? Interestingly, Turkey's not even featured in the top 10. South Africa's above Turkey. Some of the bigger, ratios or more debt encumbered, Ukraine, Hungary, Brazil, Mexico, Malaysia are the top 5. So there is a lot of gunpowder out there that can be sparked by this kind of macroeconomic situation. Speaking of which, why don't we just turn real quickly then? I mentioned about this, I call it a mass psychology phenomenon of these strong male leaders being elected in various countries. Russia, Turkey, the United States, China, Japan. When you have a lot of bulls at the helm, it can't bode well for geopolitics and for, peaceful conditions.
Geopolitically, we're at a very interesting time in the history of the planet as we know it, folks. And certainly, Greg suggesting that alpha characters in charge of very large economies with their own agendas doesn't augur well for a cooperative global economy. And we're seeing that all over the place. How does this resolve itself? I'll tell you exactly how it resolves itself. At the end of the day, it's about economies and the betterment of individual societies. We've seen that sadly in Venezuela. At the end of the day, it comes home to roost if there are problems inherently. And some point in time down the future, we will see who was right, who was wrong, who's played their cards more intelligently than others. But I'm hopeful that all these leaders, at the end of the day, recognize that in their best interests is their societies, their homelands, their countries, and they do whatever's in the best interest of everybody at home, which to a degree would have to include some cooperation with other entities. So hopefully the world, the cycle changes and we get back to a place where more cooperation is visible and is the norm.
Yeah, certainly everything is cyclical, and we've got, I take odds with your comment around, the leaders will do what's best for their people. I mean, you got that nutcase in North Korea, who I don't think has got his people's interests at heart. But anyway, let's conclude a little bit then, Dr. Crook. He's not really a doctor.
Not a doctor.
About the investing side. How does one view the world today? And my 10 cents or 2 cents worth is that let the big boys fight it out, throw their trade tariffs around and whatnot. If I was running an emerging market economy, I would called at the front of the shop. We'll take the trade tariffs. We'll play nice with everyone. But we'll go to the back of the store and we'll just manipulate our currency a little more. Maybe devalue it, make it a bit lower, and just neutralize the effect of trade tariffs. So I think FX is a place where worth looking. There could be a lot of opportunity. Certainly, we know volatility brings about opportunity, and I suspect we're just going to see more volatility in FX. Any closing words from you on that?
Certainly, the recent past, Greg, has pointed to that. Some of the world's larger, more liquid currencies have really traded with a lot of volatility, and we've seen downward pressure with a stronger dollar on the world's more important or larger, more liquid currencies. That will continue. I do agree with you. Certainly, currency manipulation is something we need to be cognizant of. At the end of the day, if you're a free marketeer, such that I am, the most liquid, efficient markets in the world, bar none, I believe, are the currency markets. They certainly trade for longer periods of time than any other market, and they are reflective of what's going on in the world. So the market's bigger than anybody, than any entity over time. So even short-term interference, and the fact that President Trump trying to suggest to Chairman Powell, let's not raise interest rates, we don't want a strong dollar. We've alluded to that earlier in the conversation, but those things are short-term. In the long run, we will find the equilibrium between all the various currencies, whether it be the dollar index and the basket of six, or individual currencies like the South African rand or the Mexican peso or the Turkish lira for that matter. And barter will become more prevalent. Trade in other currencies will become more prevalent. But for the time being, keep in mind the dollar is the big guy. Everybody all over the world requires dollar assets, and treasuries are one of those dollar assets that one should keep their eyes on. But I do believe we will find opportunities in currency markets as the months move on.
Just ending off currency markets, we're seeing inbound requests from wealthy South Africans, wealthy folks, wealthy families out of Monte Carlo,
Latin America,
all looking for real estate, hard currency real estate here in the United States. So that's great. And Crookie, thanks very much for your comments. I'll turn it over to you in one last sec. Just tell all our guests here that South Africa is on sale right now. If you want to go down, check it out, go on safari, go on the vacation of your life. You'll really enjoy that. So thanks for tuning in. And final words from you.
Greg was talking about a trip to South Africa is on sale, not necessarily South African assets. We're not suggesting you buy South African assets right now, but it's certainly a vacation down there, absolutely. We look forward to our next, hopefully interesting dialogue with you. That will be in about 2 weeks' time, give or take, unless something untoward were to happen that would be of interest in the shorter term. Once again, a reminder, our URL, acgwealth.com. Greg's email address, gsilberman with a B at acgwealth.com, and I'm dcrook at acgwealth.com. Have a great weekend. This is a Friday afternoon. If it's after the weekend or during the weekend, we hope you're all having fun, and we look forward to having you back.
Thank you. And send us some feedback. We'd love to hear from you.
Please do.